Hey guys, Ben with Income Options Trading here on Tuesday, January 14th. What a whippy day today. We're about a 1% move from top to bottom, and it was a roller coaster. And my morning Iron Condor survived, but my afternoon put spread did not. So the PPI number came out this morning at 7:30. Came in a little softer than expected. So at 7:30 we had a spike, but came back down around lunchtime. And then we had a big roller coaster there in the afternoon. So overnight, the VIX was down a little bit, but it wasn't down much. And when I went to put on my reverse R and fly, it was a risk 2,400 to make 600. And I just did not like that. Even last week when I didn't like it, it was at like 20 bucks, 21 bucks. And at 24 bucks, I just did not like it. And just for reference, I was looking at the 58.60 as the center and 30 wide on both sides. So if I would have put that on, it would have been about $17 away. So it would have been a $700 loser if I would have put it on. So just in hindsight, you know, it's one of those where, yeah, my trading plan says to put it on, but I just didn't like the risk to reward. And then I could have sat and not put on my regular Iron Condor, but the premiums were pretty juiced today, so I decided to put it on. If we go into the activity here, so on the put side, I was at 57.75. So low was at 58.05, so about 20 points away, even from the low. And that was after basically a 1% down move. And then the call side was at 59.20, which was way above, like 50 points above the high. So calls basically went worthless right away. The puts stayed bid a little bit here. I was down slightly around 11 o'clock here, I think, on the put side, if I remember correctly. It was basically break even at that point. But other than that, it survived. Then in the afternoon, we had this rally here. Normally, I like to put on that trade as close to 12:30 as possible, but I was busy with work and I lost track of time, and I put it on at 12:40. So obviously, this is just hindsight trading, which isn't the best thing to do, but I did look at it. If I would have put it on at 12:30, which would have been in this range here, I would have put on the 58.10 short put. But since the market rallied 10 points, I had to go with the 58.20. And in hindsight, I mean, if we're just playing by the numbers, if I would have put on the 58.10 strike, I close on a breach, and it didn't breach 58.10. It got real close. It was 63 cents away, but it didn't breach 58.10. So I would have survived. Still would have been scary, but you know, hindsight would have survived. Instead, I had the 58.20 put, and this at 13 minutes it went down basically 1%, just under 1%. Just an elevator down. Got stopped out here right on the breach, and then obviously at the end of the day rallied. So not the best. In this case, I only closed the short put, so I had my long that was at 57.70. So if this would have kept on going, my long put maybe could have survived, or maybe back money, like if it was an FOMC type day. But what happens 95% of the time is that long put ends up worthless. So I get a lot of questions like, okay, you close the short put only, you have the long. Well, if it's a rebound, it's, hey, why didn't you close that long put right away? And then you have days like FOMC and last week where things just keep drilling down, and if you hold it, that long put becomes in the money and it's worth tens of dollars. And you're like, why didn't you hold the long put instead of getting rid of it right away? So, you know, most of the time, if you close it right away, that's the better play. That's what I did. I just I closed it for 5 cents here, just because $5 is $5, I guess. But I got stopped out at 7.20. Originally on the short put, it did get up to like $14, so it would have been an extra $700 loser per lot. If I would have, closed it at the very bottom. And that's just shows you how quickly going from here to here, 10 points, that put goes from $7 to $14. So it when you have this velocity of a move, those options move quickly. So it's one of those where I was down on the day, down about $900. I was up 750 or so yesterday, so down about 150 on the week, but feeling pretty good. I stuck to my trading plan for the most part. I didn't do exactly what I was supposed to do in the morning, but that worked out, and I just didn't like the risk to reward. If we look at the 1 minute chart, I used the 5 and the 40 EMAs to determine trend. So around 12:30 is my first time, and I put that on. Second time's around 1:30. With this dip here below the 40, I decided not to go in. So I only put in the 12:30. If I would have put in the 1:30, that would have excelled my loss. So in hindsight, good thing I didn't put that on and stuck to my trading plan there, and just did the one. So basically a break-even week so far. CPI number is out tomorrow morning. So I had saw someone or some people on Twitter, sometimes with this roller coaster prior to CPI, sometimes larger traders like to take off trades closer to the end of the day, and that could have been around at this point here, 145 or so. Some larger funds maybe were selling, but I mean, it was just a roller coaster ride of a day. If you look at the E-minis, we were at 1.7 million. I think we were at like 1.75 yesterday. So basically the same as yesterday. Still really elevated. But VIX is up still. It's still in the 18 handle, which is nice. VIX was actually up a little bit during the day. Yeah, it rallied quite a bit with that drop, but VIX is still bid. I'll be curious to see if it stays bid after CPI tomorrow. I think it'll be bid through the inauguration, which is next week, Monday. Markets are closed. So next week will be really interesting, just with Trump coming in. If he signs any executive orders with tariffs and that kind of thing, if he actually goes through with it, I think the market's going to be pretty volatile next week, but we'll see on that. So CPI tomorrow, nothing during the day. There is crude oil inventories at 9:30, but that shouldn't affect anything in the S&P from a number standpoint. So yep, tomorrow I'll look to put on Iron Condor in the morning, or reverse Iron Fly. It'll probably be an Iron Condor. I'm guessing it'll be similar risk to reward as it was today. So I'll put on my regular Iron Condor in the morning. I'll also put on my double calendar, which is usually a 1 day, 2 day double calendar. And I'll close it before the end of the day. So it's basically a 0 DTE trade. I couldn't do it last week because Thursday we were closed. And then in the afternoon, I'll look to put on my short put spread. So that's what tomorrow brings. And then, like I've said, Thursday, retail sales at 7:30. So another number that'll affect. And then Friday, there's building permits at 7:30, but that is not expected. That'd be a high impact event. So, yeah, overall, a successful red day. Still doesn't feel great, but feeling good that I did stick to my plan and didn't fight it, didn't double down. It's one of those things too where doubling down gets you into a bad habit, because if you were to double down here and it works, well, then you get into the habit of, hey, if I double down every time, it's going to reverse and I'm going to make money. But that's kind of the downfall, because the one time you do double down, and the market continues, then you have losses way higher than you expected. So sticking to the trading plan and mentally staying sound. So that's a win in my book. So hope you guys had a good day, and thanks for watching, and I'll see you tomorrow.